Hello and welcome to another update video about XRP. Here on the XRP chart, we are currently tracking a potential sideways triangle that's unchanged. I've actually added now also a wave count to the smaller time frame that shows exactly how this triangle pattern could unfold. It kind of starts to make more sense now that we get more and more price action, more price data. The thing is, with triangle patterns, we need to be careful because these often don't materialize, okay? So that means from an Elliott wave point of view, they break early or they transform into more complex corrections. The triangle is still something we should track because what we see from the November high here or December high, we see back-to-back up and down corrective price action, which means we see three wave movements up, three wave movements down, three wave movements up without clear sense of direction. So it's that sideways range that I've been talking about for many weeks, and I've been highlighting that, you know, if you're trading this, you could adopt a range trading approach, but range trading is not for everybody, and therefore it's just for many maybe just a matter of observing the price chart, understanding what are the key support levels, and just capital preservation until we get really breakout signals to the upside, because at the moment it is even plausible that the price dips a little bit further into support. This is the space we have to give the price, okay? We have to give the price the space all the way down to here, $1.20. This is the 50% Fibonacci retracement. Any break below it would change the structure. But literally, from a, let's say, daily chart point of view, weekly chart point of view, everything happening here is really just noise. So it means there isn't really anything meaningful until we really see 5-wave movements, which indicate a trend shift. 3-wave movements only indicate indecision at best or just sideways action. Whereas if we start to see 5-wave patterns, that really will indicate a trend direction, yeah? And what we want to see essentially at some point is from this area here, from this support zone between $1.20 and $2.08, we want to see an upside reaction and ideally an upside breakout signal. So that hasn't happened yet. We'll keep watching. Next upside targets are still in the region around $5, $5.60 as next upside targets, yeah? Once we get a break above recent highs, which formed here around $3.30, $3.40. The last swing high is also important, which formed here around $3.05. But let's take a look at the smaller time frame chart. Here you can see in more detail the different pathways. It looks a little bit confusing, but that's why we have different colors. So I will show you the different scenarios. Essentially, what is important to understand, we possibly form the low on the 3rd of February, and we could be on our way higher. So there are two pathways that allow for direct movements higher. The first one is the yellow one that you already know. It's this wave 1, wave 2, which was a setup for higher prices. We would now be in a third wave, but because we're dealing with 3-wave structures, because of the Elliott wave patterns, they tell us that we're likely going to move in 3-wave structures only. It is going to be a bumpy ride and difficult to, let's say, predict, and it's going to be a very difficult structure on the way up. So it could be ABC to the upside in wave A, larger B wave pullback, C wave up, yeah, and then like that. So this would be a 5-wave move that can take us into this region of $5 plus. This is the direct pathway. In this scenario, the price ideally holds above $2. I see this as a range at the moment. We have corrective price movements up and down, but there is a Fibonacci support area within the range between $2 and $2.23 that we can watch. The white scenario is a triangle. In this scenario, wave 4 is still unfolding. It never bottomed on the 3rd of February, but we wouldn't break below the low anymore, okay? And this is a triangle, A wave, B wave, C wave, D wave, E wave. In this scenario, it would be important to even hold above the 10th of March low that formed around $1.90. Yeah, any break below it would indicate a downside breakout. Risk has increased, and then the blue scenario is going to send us lower, but all it would do is it sends us into that larger support box again. Then the focus will shift towards $1.50 and $1.20. But as long as we're holding above that last swing low that formed around $1.90, the direct focus is on higher prices. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.